A huge percentage of retail traders are betting against the Swiss franc, and my fundamental analysis is saying do the exact opposite. But in this video, we're going to be looking at why the crowd is mostly going to be wrong about something, and in specific, the retail crowd. Let's head right into it. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So first and foremost, I'll be showing you economic data. Then I'm going to show you tools that you can use to see this thing happening in real time for free. You don't have to pay anybody or anything to always follow the fundamental aspect of the market most times. Let's look at it. Right here on my screen, what I have here is a scoring board of the Swiss franc. As you can see, I have the Swiss franc drawn up specifically, and let's just dive right into what we're talking about. What am I really talking about when I say the Swiss franc is strong and yet retail traders are selling out of it? They are trying to short this particular currency. Well, this is what it is. So what I have here on the left is the overall sentiment, or rather the overall calculation. Now, this is a calculation of mine. It's basically my opinion. I am sharing my own opinion here. It's not financial advice. But what is here, what we're seeing here is that on the left, we have the overall news, and on the right, we have 14 days news. Now, overall news is all about everything news on a particular news category, everything about that particular category. While 14 means in the last 14 days, what has the news been saying about these different categories, right? Now, for the central bank news, all news related to central bank, they have a sentiment strength of 43%. Now, this calculator works with a percentage of 0 to 100. 0% meaning very bearish, 100% meaning absolutely bullish. What we're looking at here says central bank is below expectation. Like, the amount of news we get regarding central bank of Swiss franc is not printing like real good information, right? For the employment data, we are looking at 70%. That is in the good side. It has started leaving the how will I call it? It has started leaving the okay range. You know, it's going, actually it's bullish already. Basically, it's quite bullish. For economic activity, the economic activity overall, right, is 76%, which is quite good. The inflation activity is 15%. Their balance sheet is 100%, meaning absolutely good balance sheet. Their consumer confidence, that is a confidence index, is 75%. So investors and consumers, what's their confidence in this market? 75%. And their speculative positioning, well, speculators are always going against the markets. They are not like the main institutional traders, right? Now, compare that against the recent 14 days. What has been happening in the recent 14 days? Now, if you're seeing strength in the recent 14 days, you expect the data of the overall to start going up slowly. It's going to creep up either slowly or speedily, but it's creeping up. And if you're seeing weakness in the last 14 days, obviously the overall data should start getting weaker, right? That's simply, it's just logical. For the 14 days, we have the central bank data being in a good side, meaning they are gaining strength when it comes to central bank data. All central bank data releases. Unemployment data, the employment data has been absolutely good, meaning in the last 14 days, any news relating to employment data has been beating expectation. Economic activity is slightly okay, you know, just above the okay mark at 57%. We have the inflation data at very terrible. You get it, like absolutely terrible inflation data. And looking at the overall, it means they are having inflation crisis to an extent based on economic data. Their balance, on the other hand, is absolutely good. Their confidence index, that is the confidence of investors and consumers, is absolutely good. Looking at the situation, it means in the last 14 days, the Swiss franc should be something you should be buying, but the retail traders are going against it. And this is something that is just known. They usually say retail traders are contrarian traders. They trade contrary to the original system. They trade differently, and there are different reasons. I'm going to tell you different reasons why. So what I have here is also a notebook. It's basically a notebook, and I have different sources, different PDFs put together, and I come up with this information when I chat with it. Now, what you understand about retail traders is this. Retail traders have three key things that make them very terrible at trading. They have emotional decision making, meaning unlike institutional traders, that is banks and firms, they trade based on short term and emotions. For example, they see like, oh, we've seen two big green candles, I should start buying. They don't understand like what really is happening. Are those candles like printing the exact information of the economic data, or is it just some huge buyers buying in, or is it just the market not seeing enough sellers, so therefore it's just going up? You get? Then they have poor market timing. That's the second thing they have as terrible movements. They have poor market timing. Their timing for the market, absolutely terrible. Now, when I say I don't mean bad people. When I say retail traders, I'm a retail trader. Everybody is a retail trader until you start working in the bank. And working in the bank doesn't make you a big trader. Trading the bank's money using the bank's algorithm and systems and ways of trading is what makes you an institutional trader. You need to understand. Using data is what makes you an institutional trader. Then another thing is reverse hunting. Now, reverse hunting, what is that? It says a common pitfall of retail traders is attempting to capture substantial swings or trading reversal against prevailing trends, which often leads to misplaced bets. You know, when you see price moving up, and you feel, oh, this thing must have it has stretched for too long, you should start going down, and you start to bet against it, or rather trade against it. That's what most retail traders do. Now, this three perspective tells you everything about a retail trader. These three things tells you this is what retail traders do, this is how they think. But if you don't have like this book I have, and you don't have like an Excel like me that can look at the actual economic data and get situation, what can you do for yourself? Well, it is simple. There are free tools. I'm going to show you one here. This is marketmilk.babypips.com. And when you come here, you can come straight to currency strength, right? Currency strength. Now, the difference between this and fundamental analysis is that this tool you see right here is literally looking at the entire market and candle ticks, or rather price ticks, and then with lots and lots of algorithm giving you accurate calculation of what is showing strength and what is showing weakness. Now, when they say Swiss franc is strong, it doesn't mean Swiss franc just stand alone and is strong. No, it means when you take Swiss francs against Australian dollar, Swiss francs against New Zealand, Swiss francs against all the other market assets, you realize that Swiss franc is gaining in general. It may not be gaining in all of them, but in general, it is gaining more than the rest. So compared to the rest, Swiss franc is the best. Now, I'm looking at the last 1 week, right? The last 1 week in real time. And you can see that the best performing asset here is Swiss franc. Again, take a good look at this. I'm going to show you 14 days. If you look at this 14 days cap book on the fundamental analysis, this is my calculator again. Swiss franc has the best performing fundamental news in the last 14 days. Put that into perspective again. It has the best here. Australian dollar seems to be gaining strength, next best thing. So what does this mean? If you're trading and you are actually shorting the Swiss franc, you're literally in the red, like in the red line. You're literally in the red line. That's just what it means. If you're trading any pair right now and you're trying to short the Swiss franc, you should be very, very, very careful. I'm going to show you something else also. So this is called a Forex retail sentiment calculator. This is made by A1 Trading, a guy called Nick Sayak, and he owns the company, and he's also a Forex trader. Not really a Forex trader, a trader basically. And what you'll notice on this whole place is I'm going to filter out everything Swiss franc, right? I'm going to filter out everything Swiss franc. I want to turn off every other thing, and let's just look at everything Swiss franc. I want you guys to see some very funny movements of what retail traders. Now, the bar chart you see here on your right is what the retail traders are trading. And then the colors on the left is a contrarian signal. It's telling you trade against the retail traders. Euro, British pound, CAD, US dollar, and New Zealand against the Swiss franc. The retail traders are shorting the Swiss franc. Okay, they are buying the base currency and selling the quote. And the quote here is Swiss franc. Contrarian signal says you should be buying. Contrarian signal is saying you should be buying. Fundamental is saying you should be buying. You have two confluence. The only thing left to make you either hold or not buy, which is holding, is that the technical chart is not printing in your direction. So let's check out the technical charts and see. Let's look for any Swiss franc assets. Let's look for something where Swiss franc is not the base, right? It's not the base. We had, what was this? Let's say this is Australian dollar against the Swiss franc, right? Okay, the Australian dollar against the Swiss franc is neutral. Let's look for something else. We have the US dollar against the Swiss franc. Unless this chart is not printing a proper selling scenario, don't sell. But take a good look at this chart over the long period of time. What do you see? US dollar base, Swiss franc is the quote. And you can see over the long period of time, the Swiss franc has had the bigger strength over the US dollar. And in recent days, right, you can see it seems like the US dollar was gaining until Friday, the last day. And then we saw that sudden drop. People who trade supply and demand, they are very, very sure about this one. This is a very good supply zone on the daily. So people who trade supply and demand, I'm just saying, this is me going into the technical analysis now. And if this is a very good daily supply zone, on the 1 hour, on the 4 hours, they are looking for price to do what? Create lower lows and lower highs. And bro, this is, I can clearly see a high, a low, a lower high, a lower low, a lower high again. I don't know if I should continue. I don't know if to continue here, but I think you get the message. But this US dollar Swiss franc, yet again, let's reverse US dollar Swiss franc. What do you see the retail traders doing? They are 78% bullish. I'm not the one saying it. It's what's happening in the market. So I hope right now you understand retail sentiment and you can be able to use it as a contrarian signal to trade and make better trades for yourself. You just need the retail sentiment should be in line with the fundamental situation. You don't need both currencies to work. You just need one currency to be stronger than the other, and then look if the retailers are running against that setup. If they are running against that setup, you have a setup for yourself. You have a winning trade. This is all from me today. See you guys in another day. I hope you learned something. Do well to hit the subscribe, like this video, share it with somebody who you think might find this knowledge absolutely useful to their trading journey. Peace.